quiet as I came up the stairs. All right. I bet you all would really like to see that QR code this morning, right? Stacy, is that day 3? Perfect. Look, I did it right. All right, I know it's the last day as you guys are doing all of this, and I know that some of us had a drive. In fact, Stacy and our drive was exactly the same, although I live an hour and a half north of Indianapolis, and she lives 40 minutes south of Indianapolis. So I know that there might be times when you need to leave a little bit early. There is a chance you might get done a little bit before noon today, so there's that. But if you do need to leave early, we do ask that you sign out. Okay, we like to make that our certifications with the hours are accurate and complete. So the sign out sheet is sitting up here with Stacy. No big deal if you're going to sign out, right? There's no shame list that says that you left early. We just ask that you do that so we can make sure that our records are correct. Okay. Is anybody having any kind of problem with the QR code? Did everybody get it to work? Well, I'll tell you what, while you guys are finishing up that, Stacy and me went shopping yesterday. I did buy some new booties because the shoes yesterday were really hurting my feet. And I didn't think I could do today in them. Lesson learned. No, she dragged me to a purse shop. I would suggest that you never go purse shopping with Stacy. I'm just saying. I ended up spending way more money than I should have spent, and then she left me alone and I bought a wallet. So, you know, what can I say?
Is it really me or is it you too? You know?
I just feel like you put the thought in my head and I just had to.
The thing was, I just kept saying, you need them both. You can't decide. Buy them both. Buy them both.
She did.
So she came home with 2 purses. I only came home with 1. Okay? Granted,
Yes,
mine
you
maybe
spent
cost
more money than the
I
other
did
one.
spend more money, okay? That's besides the point. I told her it's an investment, okay? The quality, the pebbled leather, okay? It's a thing.
They were nice.
They were nice.
They were. Well, okay, so the deal was,
There was a deal, okay?
the deal. There was the Kate Spade and there was the Coach. And of course they are right next to each other. So Stacy and I said, okay, we're going to go into one, but we're not buying anything. And then we will go into the second, and then we will make our decision from there. And so we went into the first one, and we had them put some stuff on hold.
Yeah.
And we went into the second one, and Stacy went gaga. And so she bought something.
I did.
I did buy something from there. I bought a small, cute little purse. I don't have it with me. But, and then I went back next door and said, I have to buy that other one. So I bought the other one.
And a wallet.
And a wallet.
And a wallet. It's okay, okay? I have a problem, and it's purses.
I just
fine.
don't want, I mean, I love purses, but I don't want that problem.
I don't
I have to pay for college
I
right
don't do
now.
drugs, okay? Only purses, okay? So
Fair.
I feel like it's not hurting my health, just my wallet.
Fair. So we did have a really good time, but because of the purse shopping, we were a little bit late getting back here. So you guys had already kind of done dinner, and we're just kind of still in the magic show thing, so we got to catch part of it. But it looked like you guys were having a really good time. We hope that this conference has been good. We hope the subject matter has been good. And we hope that we can finish the day, you know, and everybody can have a very safe ride home. Does anybody else need the QR code that's up there? We will put it up one more time just in case somebody hasn't maybe made it down quite yet or still needs to get breakfast, okay? Okay. Noted. This stinking thing. Okay.
Ricky, while you're doing that, can Jackie make an announcement? She just needs 2 minutes.
Can you see my title slide up there?
Okay,
My setting every time I want to go open a new file.
am I okay to go?
Yes, go for it.
Okay, so David called yesterday from Washington and was checking on seeing how your conference was going. And he reminded me that I forgot to say one thing about what the AIC is doing for you. We have hired Policy Analytics to do a complete study of the impacts of what SEA 1, how it's going to impact each individual county. And he also wanted me to tell you that they have already started discussion at the State House on things that need changed in SEA 1. The first being no adoption of lit every year. We're working on getting that part of the bill changed. Getting the EMS and fire lit defined, and adding counties to it, because currently that EMS 0.2% is only for cities and towns and fire districts. And then they're increasing the debt limit, which is now, I believe, 0.25% of the 1.2 that a county can do to 0.4. So those are things that highly impact the counties. And he wanted me to remind you that all of that should be in full discussion for our LEDGE conference. So mark that LEDGE conference date down, July 27th and 28th, because there'll be a lot of discussion on those changes on SE1. Thank you.
That's good news. Okay. Let's just kick it off, right? Let's talk about what? I didn't hear, I'm sorry.
The conference, new ledge for AIC is January 27th and 28th, correct, Jackie? January.
Oh, okay. All right, so wanted to kind of kick off the rest of the day. We are going to start with, again, I like my federal, that's just my thing. But we're going to start talking about Section 2 and Section 3 findings. But I also want to talk about the corrective action plans and how these are different from everything that Stacy talked about yesterday, okay? We kind of talked about it on Wednesday. We talked about the audit process, and I kind of went over a little bit of the different types of findings to hopefully help you understand how that all flows through. So let's see what we can, hold on, will this work? Oh, looky there. I would like to say it's the last time you're going to see that slide, but you're going to see it at least one more time. All right, so in this presentation, what we're going to talk about is I want to break down what the single audit is versus your financial audit, okay? I also want to talk about how internal controls are a little bit different with a federal audit than they are the financial audit. And then I want to break down your common Section 2 findings, your common Section 3 findings, and then I want to talk about the difference between the federal corrective action plan and the corrective action plans that Stacy was talking about yesterday, okay? Even though they kind of sound alike, they are different. I also want you to know that when I was making this presentation, I put a few pictures in it, and I was very proud of them, okay? And Stacy came in and I was editing one, and she's like, what are you doing? And I said, I'm putting pictures in my presentation because I'm tired of them not being there. And she gave me a really hard time about it, so I just want you to ooh and ah when you see a picture, okay? There's one. Isn't it pretty? See? It's pretty. There's not a lot, so just don't get your hopes up.
I just want to say, because I don't have any pictures in mine, so I said, do you have your presentation done yet? She goes, I have the pictures done. And I said, the pictures? And so she showed me all of them, and I said, those are lovely, but mine don't have pictures. And she was like, well, mine will be prettier. And I said, fine. So you like hers better, I understand.
Tis what it is. All right, so let's start with the difference between a single audit and a financial audit, okay? Trying to give you a little bit of some definitions. Most of the time we'll say, are you a federal audit, right? They'll come in and they'll want to know if you're a federal audit. So that way you know if they're going to audit your federal programs, okay? But this is really called a single audit, okay? So a single audit is when we audit a non-federal entity, which would be you guys, if you expend more than $1 million in federal awards for the year. That threshold just changed. If you remember, we've talked about it in the past, it was $750,000, but it changed as of October of 2024, so audits started after that period. So we have, I believe, completely shifted into that $1 million threshold. I don't believe there's any holdouts for counties that would go back, but there might be, okay? Your audit team should let you know for sure. All right, so what this does is it is, again, looking at your CFA, right? We're auditing your CFA, and then we're going to do some other audit work, and we're going to pick a few of your major programs to audit, right? We have to get up to a certain percent of coverage is what we call it. So we might do 2, we might do 3. If you're lucky, we only do 1. Right? So that is what that part is. It partners with a financial audit, okay? But the single audit in and of itself is just to provide assurance that all the federal awards you received were used and reported properly, okay? That's what that part is. We don't do a single audit without doing a financial audit. Okay, we have to have the financial audit because all your grants run through the financial audits, right? So we want to make sure that the financial stuff is good, and then we'll pull out and do a single audit. A financial audit, however, is just an audit of your overall financial statements. So in your guys' case, it's when you either do your GAAP statements or those regulatory statements that you enter into Gateway that we pull out. Okay, it's an audit of those financial statements, and really we are just providing assurance that everything is accurately represented with the financial data for the county. Okay. Inside the financial audit is when you will see compliance with like other things like state and local laws. All right, but you can have a financial audit without having a single audit. There are a few counties in here, let's say before ARPA, how many would you have, like raise your hand and say I've had a non-federal audit? Nobody's raising their hand? A non-federal audit. We didn't audit for your federal. Okay, so that can happen. That means that when they came in, they took your CFA and they realized that you did not meet that threshold. Okay, some of you only met the threshold because ARPA dollars came in, right? You maybe weren't federal for a while, you received all of that ARPA money, and then all of a sudden you have met that threshold. Well, they did make a little caveat for ARPA that if the only reason you met the threshold was because you had ARPA dollars, we could do like a compliance agreement and just look at the ARPA dollars and not do a full-blown single audit. So some of you have seen us come in and do that, but not actually do the financial audit, okay? And the reason that's different is it wasn't a single audit. We just did a few procedures on ARPA money, but we didn't do a full-blown single audit. We didn't go through your CFA for all of that. We didn't pick a bunch of major programs. We simply went in to review the ARPA dollars, okay? So there's a little bit of a difference. Those would have been done every year, right? So if you meet the threshold for a single audit, it will be every year. Right? It's for that year. So with ARPA, we have to look at it every year, right? So just so you know, so you may have already had that done this year, but not had a financial audit. Okay. All right, so a few more differences kind of between, I tried to make a little chart. I thought maybe it might be a little bit easier just to kind of see the differences. So we kind of talked about the primary purpose, right? The single audit is really ensuring financial accuracy and compliance with the federal funding rules. That's what we're looking at. So there's a compliance supplement that comes out for all federal grants that you receive. So while you receive a grant agreement and it tells you some stuff, it will always go back to the Uniform Compliance Guideline. Normally it'll say like 2 CFR 200 point, I don't know, whatever the number is after that, because there's a lot of them. Okay, so that's what we're going to audit against there. Where the financial statement, we're just providing assurance on the fairness and the accuracy of your financial statements. That's important for other reasons, right? And who relies on that? The scope of the single audit is just to examine your financial records, your federal award transactions, and then compliance with those programs. You've heard me go through all of those compliance things, especially procurement. We're going to talk about that a little bit more here in a little bit. So we're going to look really in detail to each of those programs that we pick as a major. Where the scope of a financial audit is just to review the overall financial statements for internal controls and your financial reporting. Okay. For single audits, again, it's only required for those that meet the threshold. And then for the financial audit, it's required under statute to be audited, but it's also required by some of your lenders, right? So if you have like an S&P rating or whatever, they rely on that information. When we talk about the complexity of the two, your single audit tends to be more complex and more time consuming. It takes quite a bit of time to go through and audit a federal program because we have to audit it in its entirety. While we test your transactions through it, we are testing all these different compliance requirements in detail, okay? Where when we do your financial audit, it's generally a little less complex because we don't have to go quite to that level of detail, okay, for every transaction that's made. The other thing is who is this for, right? So when we're auditing the single audit, your audience is the feds, right? They're giving money and they want to make sure it's being used properly. Right, so at the end of your audit, there's times when you have to log in to I forget what the new website is, Fed Data maybe? I can't remember. But for your data collection form, we'll ask you to go in and certify that information. In fact, I called a few of you this year because we needed to make the September deadline to do that. So when you go in and you certify that that's correct at the end of the audit, that's what notifies the feds. Right? You're reporting to them all of your findings, if you had any, to the feds and your CFA, all of that. That's what reports to them, okay? So they're your primary audience. Well, your financial statements, those again are going to be your lenders, first and foremost. If you're trying to go into debt for a big project or something, they want to see your financial statements. They want to make sure that everything is running the way it is. And your citizens. Right? Because they're paying into that and they want to make sure that their property taxes, local income taxes are all being used appropriately. Okay? So they are audits, they just serve different functions. They do work together in some capacity, but they are different. Is there any questions on that? Do we just love the audits? Okay, so you may not love an audit, but the field examiners rock, right? I got a lot of yeses. I like that. Okay. Thank you. See? Just saying. So cool, right? It's pretty. I just want a vacation too. So like I was thinking, although the skyline out here from my hotel room in the morning when the sun's coming up is gorgeous. But anyway. All right, so internal controls are the same but different, right? So when we talk about internal controls and the way you build them and what you need to be doing, that is the same, doesn't change. But the way we look at them is just a little bit different, and the requirements for them when it comes to a single audit is just a little bit different. So first off, when I said that CFR number will be in your grant agreements and you have to go to the compliance supplement and make sure you're in line with all of those things as well. That includes their internal controls. So in 2 CFR 200.303, it talks about this, about internal controls and what you are required to have. On the financial side, other than doing like the certifications and then us talking about it in uniform compliance guidelines, that's it. There's nothing in statute that talks about how those controls work. It says you have to do the certifications and you have to have those policies, right? But inside the uniform compliance guidelines at the federal level, it's a little different, okay? So inside the Code of Federal Regulations, it does say that you have to establish, document, and maintain effective internal controls over federal awards. You have to comply with the laws and regulations and the terms of each of your agreements. You're supposed to evaluate and monitor compliance. You're supposed to take prompt action when noncompliance is identified, and then take reasonable cybersecurity and other measures to safeguard your information, okay? Because that's in here, when we are doing an audit of a major program, we issue opinions on those major program audits, okay? We have to take internal controls into consideration. So if you have no internal controls on a major program, it could affect the opinion we issue. Remember when we talked 2 days ago, we said an unmodified opinion is the good opinion, right, that you want. All right, well, we could qualify it, and if we do that, it's probably based maybe on an internal control issue. Right? So this is where this becomes important. We like to apply this across everything, because if you have your internal controls across everything, chances are it won't be an issue, right? So we do audit these differently. We are required to audit your internal controls when we are auditing your major programs. We have to be able to test something. If we can't test anything, it's a control deficiency. Okay? That's not necessarily how it works on the financial side. We don't even necessarily have to test your internal controls. Okay? That's why we do all that documentation on the front end of it. All right? So there's just a little bit of a difference here. When we're testing the internal controls, it starts with the preparation of the CFA. Right? So when we pull that up and we are looking to see that we have got everything, and remember we went through back in May, and I kind of talked about the main things you need to make sure you have included in your grant schedule that's going to make into your CFA. Those are the things that we're going to be looking at. If anything is missing, remember we talked, if you have a compliance issue, you always have a control issue. So if we haven't put everything we need to put in the CFA, or the numbers aren't correct, we have a control issue. Okay? Then we run through the compliance requirements of the major program. And so I listed them all here, right? As we're testing, we have to do individual tests for every one of these items on here. There are compliance requirements inside each one of these categories as well. Again, a little more complex than the financial side. There's a lot we have to do here. So as we're doing that and we're testing each individual requirement, we're testing controls on each individual requirement. They are really tied hand in hand with our single audit testing. Okay? So if you have a process, getting that written down is wonderful. That will help guide us in the long term. The other thing you'll hear us say, and I forget, I think it was not last night, but the night before, somebody came and said, every time I think internal controls, I think document, 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 because that's what they say. This is where we need that. That is so key here. We have to be able to see the documentation that the internal control exists, otherwise we can't test it. Right? We can't test something that's in thin air or, a verbal thing. We need to actually be able to see it in motion. Okay, we also are going to audit the internal control policy that you have, right? Like I say, audit it. We're going to review it. It is ideal, again, if it's written, if it's communicated to your employees of how that's going to work, and again, the documentation that's required. I think of this part just a little bit differently than your internal control certification that you do. Right? That is really kind of the overall financial. This is how do we make sure that everything that we spend it on is an allowable cost of that grant, right? You could say, well, we just run it through our claims process and it gets approved. But where in that process did somebody actually check that the purchase of that item is allowed by that grant agreement? See what I'm saying? Most of the time when you run your claims, I highly doubt you're looking at that. It's almost impossible for the auditor to know every allowable cost item from every single grant that's within a county, right? So this is where we start putting a little bit back on the departments, right? If you want to have these grant agreements, then they should have a little skin in the game, right? Because they're the ones running it. They're the ones buying the items, right? And they're running them through your office. So those are the kinds of things we're looking at. Are they doing their reimbursements timely? Right? Their reimbursement requests timely. Should be an internal control there. Who's verifying that's being done? right? Those are all the kinds of things that we audit for. So when we look at those internal control policies, they should address those. It might be a county-wide thing. It could be multiple. It could be in your office, you have well, we talked about last night, Elkhart has a grant administrator. So they probably have controls in the beginning of the process and where she gets all of her information. And then maybe the departments have their own policy in how they're spending that money, how they're accounting for that money, how they know that they're in compliance. Okay, so it could be multiple policies that will work. All right, so it's not just, doesn't have to be just one, and really you can't really dictate if they're going, what policies they're going to do in their office. Okay, but when we have findings, we do mention who's the responsible individual for that, so just FYI. All right. We also look at those internal controls as they come across the policies that you're required to have when it comes to federal grants. We've talked about it in the past, and I'm not going to go into a real big detail here with it, but the two main policies are you should have an allowable cost policy. What do you need to do, right, in order to purchase that and it being allowable? There should be steps. The other really big one, which we are going to talk about in a little bit, is the procurement policy. As of now, show of hands, how many actually have a procurement policy in the county? That ties to federal, I guess I should make sure I say that too. Okay, because you are required to have one. If you don't have one, it can be a finding inside your single audit. Okay, it's just part of the single audit guidelines. All right, Stacy went through internal controls in big detail yesterday. But I just wanted to put these things up here, which are your objectives of internal controls. So the whole point of having these policies in place for internal controls is so that you make sure that the operations that are running through your office are working effectively and efficiently, right? And that your reporting, it's reliable, it's timely, it's transparent, and that you're in compliance with any laws and regulations in place. Your internal controls should address all three of those objectives to make sure that everything is running the way it needs to, and to provide assurance that it's being used properly, okay? Is there any questions about internal controls? We know they're your favorite. Stacy, I got one right behind you.
I have no idea if I have a procurement policy. I'm sure I'll Google it when I get back. But is there one cookie cutter procurement policy for every type of grant?
No. No, just one procurement policy, okay, is what you need for your overall county, okay? So it would just be like 4 grants, we're going to do ... Yeah. Well, that would be awful. We're not that cruel. Is there any other questions about internal controls? Okay. All right, are we ready? Okay. I mean, it was fading a little bit. We can do better the next time, but this is where I want to be today. Okay, or at least for the weekend. I really just want to be there. Okay, so now we're going to break down into the different kinds of findings when it comes to a single audit. All right, so during a single audit, we have Section 2 and Section 3 findings. So we're going to start with Section 2. All right, what exactly is a Section 2 finding? This was a hard one to put together, and I had to Google and take some things to try and come up with some really good writing because we don't really define it anywhere. But this finding really is from the audit of your CFA and your financial statements, okay? So this is going to report specifically findings related to the financial statements. Your CFA in this is considered a financial statement, okay? So if you had issues, Stacy was kind of talking about it yesterday, if you have an audit result and comment on your AFR, right, or something related to the financial statement, you will probably see it here too. So while it's in your financial report as an audit result and comment, it's probably going to be a Section 2 2, which seems, well, why? Why are we reporting it twice, right? But remember, the single audit package has to be reported to the feds. They want to know. We don't send them the financial statement audit. They don't care if you're in compliance with state laws, right? They only care that they gave you money, right? And that you're in compliance with that. So we have to put it in both places so that that whole package goes up to the feds. That's why you will see it in 2 separate places, okay? And almost always it's different in structure, because the federal findings structure is a little bit differently, the way it's written, but the body, the context of what the findings are almost going to be exact, okay? There might be some groups that try and make it a little bit different, but they should be very, very close, very, very similar. But this is also where you're going to find your CFA finding, right? So if you had any issue with your CFA, this is where it's going to fall in a Section 2 finding. All right, so I kind of talked about this a little bit, right? So sometimes this finding for your financial statements might not be called annual financial statement. It might be called financial transactions and reporting. Okay, that is the most common title for a Section 2 finding that has to do with financial statements. Although, when I was doing this and I pulled through some of the single audit reports, I noticed our field was naming it all kinds of different things, which made that very, very confusing, and we were working on that, right, so that it stays the same. So in that finding is going to encompass any kind of issues that we found within the financial statement. So let's say during the financial statement audit, you overstated a fund or understated a fund, right? You showed it had too much in its receipts or too little in its disbursements, whichever it is, and you had an audit result and comment, that's going to show up here, okay? If you had an overdrawn fund, that would show up here, okay? So any kind of financial statement issues will be here. Oh. All right, so because of those, any issues with the financial statements, we have to report the internal control issue with it, right? Because the feds say you have to have internal controls with all of your federal programs. So we'll look at the annual financial report and look through the internal controls. A lot of times we do see the segregation of duties. You'll hear that almost always because, again, as auditors, you're in there doing things, and sometimes we don't have that second review done, or where you're preparing it yourself, or somebody's preparing it and you're submitting it, but there's no documentation that any of it happened, okay? So we're looking at that. We're also looking for the timely submission. So you could have an internal control issue if, as of, I think March 2nd, it's due this year, but you don't submit it till March 15th, right? Because one of those objectives of internal controls is reporting. So if you miss the deadline to do it timely, then you don't have a control properly in place to make sure that you're reporting it timely, okay? We also are going to look through receipting and dispersing. There's where a lot of internal control issues happen as well. Timeliness with the receipting and the dispersing. The process for recording those receipts and disbursements. Any kind of review that's having to happen in between there. The supporting documentation is in there. I put maintaining integrity because it was in a couple. I didn't really like the wording of it, but it was in the finding, and I just was trying to be as consistent as I could be on it. And it was where we couldn't verify information. Okay, they just tried to make it really kind of fancy there. Those were the 5 main internal control issues that I found when I went through all the audit reports, okay, which was a lot, by the way, 92 of them. Not quite 92, but a lot of single audits. So those are the kind of things you want to be looking at. And again, like I said, it just needs to be something that hits within your financial statements to make sure that everything that's receipted is receipted in a timely fashion and has its supporting documentation. Disbursements are the same thing, okay? Along with that, we do have the compliance reporting issues with the financial statements. The most common I listed here would be, again, Supplemental AFRs left off, or other funds left off that weren't included in the financial statements. Remember, we talked yesterday about you don't want to have a bank account over here that you move money and nobody really has authority over that, just one person. We don't want to have that. There is nothing like that in accounting. It's all public funds. It all needs to be on the ledger. It all needs to be reported unless statute gives authority to somebody else. As we're auditing through the financial statements, we are looking to make sure that we have support for receipts and disbursements and balances, and looking to see that they are accurately reported. We don't want to cause overstatements or understatements, okay? And so anything that's an overstatement or understatement becomes a compliance issue, and that was one of the most common. And to be honest, it's always kind of one of the most common. Either something has occurred or we've reported something twice, things like that. Supporting documentation, and the biggest one on this is a transfer versus a correction of error. And I want to specify this one because sometimes we think they're the same thing. They are not the same thing, okay? When we talk about transfers, as Stacy did yesterday, we are moving money from one fund to another fund because we want to use it in another fund. Right? We can't do that unless statute allows us to do that, because you start muddying the waters and you're commingling dollars, and we can't tell what revenue is used for what. That's why it's set up in a special revenue fund specifically for that revenue to be used for a specific purpose. All right, when we talk about a correction of error, while sometimes this looks like a transfer on your records, depending on when the correction of error occurs, it's not the same. A correction of error is, I wrote a check out of this fund, and then I realized later it should never have been paid out of that fund. It was an error. I posted it incorrectly. I need to move it to the correct fund, okay? If it's during the year, you just move the expenses that you spent, right? So you're in the same calendar year, you realize, oh, I posted that to the wrong fund. I am going to take those expenses out of that fund and move them to the correct fund. The issue comes when you cross years. You can't do that when you cross years. Once you've closed out a year, you no longer can move expenses between funds. You actually have to do what looks like a transfer. What's important here is that you need to note it's not a transfer, right? You need to note this is a correction of error, and go as far as to detail out what that correction of error consists of, because we want to see the support for it. You can't just write correction of error and move money, right? That can't happen. What it should look like is, I wrote check X, Y, and Z from this fund, and I should have paid it from that fund, but I did this 2 years ago. I'm just now noticing it. I need to make that correction. But it should list out the check number or the claim number or both, the amounts that you're going to use. You should be able to tie it exactly to what you did. If you can't, then you shouldn't be making a correction of error. Okay? But it's important that you document and you use those terms, because otherwise it looks like a transfer. And transfers aren't allowed unless statute allows it, right? Does that make sense? Okay, because that was a very common one that I found. The last other common one I found was the reconcilements, okay? Reconcilements from your office to the treasurer's office, right? We see that, either it wasn't being done. Well, no, it wasn't being done. It's really it. Or we can't reconcile the financial statements as a whole to the bank at the end of the audit. Right? We talked about how important that is, so that we know everything that you're reporting reconciles to the cash you actually have. So we would recommend working again with your treasurer, making sure, because their reconcilement starts with you. They cannot move forward on a reconcilement until they know that their financial records match your records. And there are times it won't. There are times when little adjustments happen and you forget to notify them, or they forget to notify you. That's why each month you should come together and say, oh, I totally forgot I posted this, or I did this. Reconcile it, make the adjustment however it needs to be done on whichever side of the records, so that they can move on to reconcile their cash book. But they have to have that reconcilement because those numbers from the fund statement flow into their cash book. if these aren't right, this isn't going to be right, right? And even if that all reconciles over there, but they don't reconcile to your ledger, you're not reconciled because you're the fiscal officer. So your records are the official records of the county. Okay, so it's super important that they start with you. Okay? Is there any questions on the financial statement part? All right, let's go to the favorite one. Preparation of the CFA. This is the most common Section 2 finding, even over financial statements. It's hard to get the CFA perfect. I know that has always been the ultimate goal, and every time I do the deep dive training, it's like, I'm going to get it perfect. And I think, personally, I think perfection's a little overrated. I think that we need to get the information, and we need to be as diligent as we can in getting that. I think the issue comes when we continue to make the same mistake over and over again, right? But if we're having a finding and the thing is different every time, at least you're correcting what went wrong. We may not have seen it last time. Maybe it was a new grant this time. Things can be a little bit different. But this is all on internal controls, right, of your CFA. You're reporting all of your federal assistance by the assistant listing number, or what formerly was known as the CFDA number. So let's break it down just a tad bit. All right, so internal controls over the CFA, again, are the same kind of with the financial statement. Basically, segregation of duties. Somebody's entering those grants into the system, creating that, what's going to create that CFA, but we should have somebody who is reviewing that information to make sure it's accurate, right? We need a review, always need a review. Somebody looking after our work and making sure it's timely. For it to be timely for regulatory, it's done with the AFR. So it should be complete and submitted at the time you submit the AFR, okay? For GAAP, it's a little bit different. Yes, you're supposed to submit timely, and that becomes a compliance thing, but it will be turned in with your GAAP statements, because chances are your compiler's creating your CFA, okay? Most of the compliance issues around the CFA are amounts not accurately reported. This causing an overstatement or an understatement of the expenses on the CFA, right? We forgot this, we forgot this one over here, or one was in the wrong time period, or we just reported the wrong amounts. The other is just information not reported correctly. So is it a direct or a pass-through, right? If you say it's a pass-through, but it's a direct, that's a problem. This is the kind of information that needs to be accurate, because the feds need to be able to track all of that. Okay, that's what they're saying. It has to be there. There were non-federal grants reported. So remember when we talked about chart of accounts, all federal are in the 8,000 fund, right? That's a great place to start and pull things. If you're pulling stuff from your 9,000s that are state and local, those aren't going to be correct. If they're on there, then we're misrepresenting what the federal assistance was, right? We don't want to report state and local, only the feds. How much you give to subrecipients has to be on there. It would be included in your expenditure side too, because you are expensing it from the county, but then you're going to show that here's the total amount I spent from that grant, and this amount of that amount is how much I gave to subrecipients. So if you had a big grant and you spent $20,000, but $5,000 of it went to a subrecipient, your expenditures are going to show $20,000, and your subrecipient expenditure is going to show $5,000. It just says that 5 of that 20 went out. Does that make sense? We also want to make sure that the program names, the assisted listing numbers, and the pass-through entities are correct. All right? Who'd you get the money from? Right? Those are the most common, and again, maybe information not complete where you left off a grant. That has happened too, where we find later, oh, that grant was never included in the CFA. Okay. I only mentioned this briefly, and I don't know if you've noticed a theme with capital assets at this conference. But there is a chance that capital assets could be a part of your Section 2. Capital assets are a major material part of your financials in accounting. I mean, you just have a lot of things there. So if there is major problems with the reporting of those, it could come into a Section 2 finding. It just depends on what is missing, if it's material, those kinds of things. We have to evaluate it. And again, if we're evaluating it for compliance sake, then for internal control comes in. You know, what departmental items are included? Were additions and deletions taken into place? And were the inventories taken? Were there controls over those processes? Okay. I'm going to skip this next one because we talked about it yesterday, just so you can ooh and ah over that. Oh, wait, that. Oh, yeah. I liked that. Oh, yeah. Yeah, that's a good one right there, right? Before I move to Section 3, is there any questions over Section 2? Okay. Oh, I got one way over there. She's coming. I know.
Did you see that footwork? That was crazy.
It was beautiful.
Is there a way to find out the correct assistance listing number? It never fails. I get the wrong one from the departments.
So in order to verify the assistant listing number, you can do that on the sam.gov website. Yep. So get your grant agreement. So anytime you get federal assistance, you should get a grant agreement, whether it's direct or whether it's pass through, and they're required to tell you it's federal funding, and they're required to give you the numbers, and then you can go on there and verify. Okay. Okay. All right, so we're going to move to Section 3, findings. All right, so Section 3 findings are over your major programs, okay? This is where we take your CFO, once we get it to what we think is accurate after we've completely audited it, we run it through some stuff and look, because we have to get a certain percentage of coverage from your programs, your major programs, to audit in order to say, to issue an opinion, to say that we believe that these are accurate, not accurate, whatever. But these findings are specific. They're not wrote in total. So when we're auditing a specific major program and we start going through all those compliance requirements we talked about on those other slides, you could have a finding on each individual one of those for that major program. But each major program is done separately. Okay, so we're not going to mix the findings together. When I was kind of going through this, somebody said, are you going to do like specific major programs for this when you get up there and talk to them? I'm like, no, I would be there for 3 more days because it gets complicated to start trying to pull what major programs, because what's a major program in your county is not a major program in your county. All right, so I tried to I read through all of them and I just pulled the main compliance requirements we seem to have issues with. Okay, so each compliance requirement, whether it's an allowable cost, whether it's got subrecipient monitoring, whatever it is different for each major program. Okay, so it's important that you know when you receive a grant what compliance requirements you are required to follow for that grant, but they are different from every grant. No grant is exactly the same. Okay. So when I went through, I just picked a few compliance requirements that seem to be the biggest ones. The first ones are activities allowed and allowable cost. It's actually 2 separate compliance requirements, but typically we audit them together. One is the activities that you're doing, and one is the cost associated with those activities. All right? Sometimes you're doing an activity that's not allowed, but the cost itself was allowed. You were allowed to buy supplies for one activity, but not another activity. So we audit them together because that makes the most sense for us, and it's a time-saving thing. So when we're looking at that, again, we have to audit internal controls, right? We have to know that you have controls in place. We're going to pull a list of transactions, and most of these look like, or most of what I saw, were just purchasing items or participating in activities that weren't allowable for that grant, okay? We also found that there were a lot of supporting documentation missing. So contracts, invoices, and any kind of allocations. So sometimes you're doing something, but you're not paying for it 100% from a grant, right? You're paying from another fund that's not a grant. And when you do that, there needs to be some sort of supporting documentation that shows the allocation between the federal and non-federal fund. All right, as you're working on that. Just like, I'll use MVH for an example, just like MVH, right? If you're going to be paying payroll from the unrestricted and the restricted, we have to see how you're allocating that. The documentation that supports how you split that amount between the two. All right, so the same thing goes if you are using federal funds with other non-federal funds. If you're splitting it, what's the allocation? If you have an individual, for let's say, who works on a grant in a department but also does other things, and so they're only paid partially by the grant, right? Their time records should show, I spent this amount of hours doing this, and I spent this amount of hours on the grant. That's supporting the allocation that you use between the two, okay? The other one that I saw was period of performance. So every grant that you enter into has a time period, has a starting date, and it has an ending date, right? So what we're seeing through here is that sometimes things were paid prior to the start date. Well, we got that invoice back then, even though I just got the grant, but it's really for that purpose. But the grant says you can't spend it on anything until this date, and you went in front of that date. It's not allowed. Same thing is at the end, right? You don't spend all your grant money, the grant ends, and you're like, oh, I got these dollars, I'm going to go ahead and spend it. You're outside the period of performance. You were giving that grant, you were said you need to use it in this capacity, and here's your time frame. So it needs to be used within that, okay? There also needs to be controls in place to make sure you're in that time frame, okay? Whether that's at the department level or in the auditor's department. Subrecipient monitoring is another big one that we see. A lot of times we're not seeing an agreement. You can't give money in any capacity to anybody without an agreement. There has to be an authority to give that money. Most of the time it's going to be in some form of agreement unless it's an invoice or a contract, okay? You never just write a check to somebody with nothing to support why you're writing a check to somebody. Okay, even if it is a not-for-profit. It should be an agreement. You're giving them your portion of federal money, and they're supposed to be upholding what that grant agreement says. The agreement should outline what kind of monitoring you're going to do. Are you going to be looking at their claims? Are they going to have to financially report to you? Those kinds of things. And no supporting documentation that monitoring was even occurring. So maybe you did have an agreement, you gave them money, but that's all you did. So you never verified that they were doing what they were supposed to be doing. Unfortunately, with federal programs, you're required to. So you need to document that. And again, that monitoring could be different depending on what your agreement is or what is required within the grant agreement. Okay. All right. Reporting, we've kind of already talked about this, but reporting in your major programs can be a problem, right? Your overstatement, your understatement of amounts when you're filling out your reports that you report to the feds. Some of them have like a quarterly report or a monthly report. If those do not accurately reflect your financial statements, that's going to be a major program finding. And again, are you turning in those reporting for that major program timely? If you're not, again, there's a compliance thing. And we need to have some internal controls to make sure all of that is occurring. Okay. And the last one that I found is procurement. Procurement has been on the top for years now. It's hard. There's a lot of moving pieces. Not only do you have to, when you're buying anything, follow state law, you also have to follow your local policy with it. And then if you're using federal dollars for it, you have to follow the federal. All right, so there's a hierarchy. If it's federal money, it always has to be federal first. You have to follow all of those, and then everything else is stricter guidelines. But there's a lot of moving parts when you're procuring things. So again, the procurement policy is the biggest thing. We've talked about it. If you don't have a procurement policy, you're going to have a finding on it. The federal guidelines require that there's a procurement policy. So if there isn't, and they start auditing the procurement for a major program, it'll be part of the finding. But the number one thing is suspension and debarment. Okay, and we've talked about it. So you're not allowed to enter into an agreement or pay anybody that's been suspended or debarred. Okay? Most of the time it's done in the contract, right? How many of you have standard language in your contracts that say, when they sign it, that they're not suspended or debarred? Okay, that is the best way right there. That is going to make you in compliance because those people are certifying they are not suspended and debarred. But if you don't have it in your contract, then you've got to figure out another way to do it. The best way is to work with your attorney, have them create a sheet that makes that individual certify that they are not suspended and debarred. Okay, that will meet that. If you are just going to sam.gov and you're pulling it up and it's a blank screen and you're like, I'm good to go, no, you're not, because that is not an end-all be-all. They have to register with sam.gov for you to even get anything from them, okay? So it may or may not work, but it is not the accurate way to do it. We need to make sure we have something from them that says they're not suspended and debarred. The bigger problem comes, I think contracts are starting to get better, is covered transactions. Anything that's over $25,000 has to be reviewed for suspension and debarment when it comes to federal dollars. Okay, so any transaction. So if you purchase something with an invoice from a company, or you bought a vehicle with federal dollars that's over $25,000, you have to do something for suspension and debarment. You can't not do it just because it's not a contract. It's called a covered transaction through the federal lens, and that is what they require. If you're curious about it as you're going to make something, give us a call. We'll talk you through it. We can give you some ideas on how you're going to do it, but most likely, the best thing for your covered transactions would just to be to have that piece of paper where when you're buying it, you have them go ahead and take it with them and have whoever. If it's a dealership, have the dealership sign it. Okay? Just something, and then you keep it with your grant stuff so that if that gets pulled for a major program, you can say, hey, we did do this for our covered transactions. If you're not sure something meets the definition of a covered transaction, give us a call. We'll get that information for you as best we can, okay? Is there any questions on Section 3 findings? Okay. I love that you're the first one to do it. All right, so let's briefly talk. I know I'm going to be over just a tad bit, but that's okay because the Q&A is probably going to be a lot less than what we think it is. So, federal corrective action plans. I use the word federal in here because we don't call them that. We call them corrective action plans. Just like Stacy called hers corrective action plans. And I walked all over our office and I said, why do we not differentiate these two? Because they are different. So what I'm talking about are the federal corrective action plans, okay? This is completed before the exit conference at the audit. This is required by the feds. In fact, when you were doing the corrective action plans, this was there long before the repeat comment one was. You've always had to do a corrective action plan for a finding inside the single audit report. This is done before the exit. We have to review it. We have to audit your corrective action plan. So we won't be getting this from you afterwards. You'll work with the field examiners when they come in and have you do the corrective action. They'll give you a template. They'll talk to you about it. They'll bug you for it until they get it before the exit conference. And then this will be included inside the reporting package, the single audit reporting package, where your corrective action plan for repeat comments is not. Okay, that's a completely separate thing. This is. So this is your place to show what happened, what you're going to do to change it. It includes the contact person that's responsible for that. This is where if your departments are working on some of this and taking some of that responsibility, their name will go there, not yours. Okay? Again, it has to have the corrective action that is taken, and it has to have an anticipated completion date. There are a few other things it has to have, and I put the CFR on here just in case you wanted to do a little light reading. I mean, you think statute and stuff's a little light reading. Try the Code of Federal Regulations. Whew! Some of us enjoy it, but that's neither here nor there. Okay, so I kind of already said this part, right? It's all of this. It is reviewed in the next audit. All right, so when we come in to do the next audit, we do this thing called the prior period audit finding, wait, what am I saying? Prior period, summary prior audit findings, something like that. And so what we do is we look at those corrective action plans and those findings from the prior audit, and then we have to create a summary of what happened in that audit, and it's included in the single audit report as well. Okay, so we can say, yeah, they fixed this. Everything's good. That's not an issue here. All right, so what happens when during the audit you get a finding and you don't necessarily agree with it? You still have to do a corrective action plan. Okay, but you must give a very detailed explanation of why you disagree, okay, for it. And the reasoning that you have there, okay, if you want to include it. It can't just be simply like, they're wrong. Okay, that's not going to go, and we'll push it back, and we'll say you're going to have to type out, why do you think it's wrong? Give us the detail behind your reasoning. Okay? And if you give that, then that becomes part of it's still in there. It's not going to pull the report, but at least it has your reasoning of why you don't think it's an issue inside there. Okay? All right. I went over about 5 minutes. I think I went over 5 minutes on every presentation since I've been here. But does anybody have any questions on the federal portion of it? Because I will be willing to stay after and talk for hours. There is a question in the back of the room. For hours. Deb, you don't want to? Are you sure?
I mean, she really could talk for hours about federal grants.
During our audit, the sheriff has questioned if there was a way to modify their finding because they didn't feel like it was like it was on them. It was through our building authority, even though it was something that was used for their building.
Okay.
They just asked if they were able to modify that finding to show that it was really the building authority and not the sheriff's department.
Okay, what happened when they asked that? Do you know?
Well, that was my question that I was just
you're asking like what happens if they want. Okay.
Mm-hmm.
So if you're reading the finding, I'm going to go back to, I don't care what kind of finding it is. When you get it, if you have a question about the finding or don't understand why it's on you, you start asking lots and lots of questions. Okay? And I want to emphasize that. Your field examiner should be able to tell you exactly why it's an issue. If you don't agree or you just feel like there's still some miscommunication, then we need to escalate it up their level. So audit manager needs to get involved, or the audit coordinator. Stacy and I can be involved in it, although we choose to be the last option. Okay? Because we are a little bit separate from them, but sometimes we can come in and say, it's just a miscommunication. And so sometimes we can go to the field, get it, and we can come to you and say, all right, I get what you're saying, but this is why. And we can kind of talk it out. I can't promise it'll get changed. Sometimes it does. Sometimes it's just, by the time you see the finding, it's not in its final form anyway. Okay, it goes through numerous reviews before it becomes a public document. So anytime you want to make a suggestion or say that, we can look at it and see if it makes sense to do that. So what you see is kind of a rough draft at that time. Is that helpful?
Yeah.
Okay. Is there any other questions, or you really want to talk about, I don't even know what we're talking about.
End of year processes. Woo!
Oh yeah, end of year processes.
She's like, oh yeah.
Oh yeah, that thing.
That.
Okay. Well, I'll bring Stacy up. We'll get that going. But call me anytime. I love to talk about federal.